Good afternoon. This is Sean Golding with Golding & Golding here to discuss the foreign account reporting requirements. Maybe you just filed your FBAR because you thought it was due in April, or you just filed your original tax return. You might have had 8938s. You might have never heard of any of this until a week after you file, and your friend asks you whether you reported your foreign accounts, and you look at them with a dazed and confused look because you didn't know about it. So let's walk through it, noting that 99.9% of the time, there's a safe way to resolve the issue. Many different types of foreign accounts need to be reported, right? Commonly, you'll see the term FBAR and you think bank accounts. And of course, bank accounts do have to be reported, but there's various other types of accounts as well. Investment accounts like a securities account, pooled fund accounts like a mutual fund, ETF, CCOV. Even if you own pooled funds individually, they're still reportable. It could vary whether you have them in an account or you own them individually. Pension and retirement accounts, whether it's a personal pension, which is pretty common in countries like the UK, or if it's an employment-born pension, those are reportable. There was some confusion because the IRS had some information up that made it sound like pensions aren't reportable. And what they mean is if you have like a 401k or an IRA and you've got some foreign accounts in those plans, you don't have to parse out the foreign portion of your US qualified plan in order to report it. Life insurance, lots of other assets as well. Maybe you have foreign trust entities, all reportable, right? Which forms do you file? Well, there's lots of different forms depending on the type of account you have. The FBAR is the most common, foreign bank and financial account reporting. It is filed on a FinCEN Form 114. FinCEN is the Financial Crimes Enforcement Network. FBARs rarely have anything to do with crime, so please try to avoid the ridiculous fear-mongering you will undoubtedly find online. Even though it's not an IRS form, the IRS is tasked with enforcement. They like to enforce penalties, but they've been limited somewhat by the recent Supreme Court case in Bittner. We have a separate video, audio that you can listen to on that as well. FATCA is the Foreign Account Tax Compliance Act, especially for U.S. citizens who live overseas as expats and they want to open up foreign accounts. A lot of the foreign financial institutions limit it, and the reason is FATCA, because there's reporting and exchange of information that has to go on, and if there's no U.S. persons, well then these foreign institutions don't have to deal with the headache. But from a U.S. perspective, individuals have to report it on Form 8938. There's also something called PFICs, Passive Foreign Investment Companies, and they can get super complicated, but from a baseline perspective, for most individuals, if you have foreign mutual funds, a securities account in Taiwan, a stock and shares account in the UK, and you have funds in there, then they can be reportable. Those are just two examples of hundreds of different flavors, right? But there are some limitations depending on what the value is, whether there's excess distributions, and if the treaty country pension/trust exception applies. The problem with not reporting the account seems like no big whoop, except for the fact that the IRS really likes to enforce penalties. Sometimes you receive a soft letter, which basically might be a situation where a foreign financial institution with FATCA that we just talked about might have reported you to the IRS along with hundreds, if not thousands, tens of thousands of different clients, customers of the bank, and the IRS, for whatever reason, your return got pulled, and they go, oh, hey, you don't have this information on your tax return, but they haven't penalized you or audited you yet. Instead, they sent you one of these soft letters. I believe it would be like a 6251. Audits and examinations are on the rise. The IRS is trying to hire a whole bunch of agents. Various people are trying to prevent that from happening, depending on whether they get funding or not. When you have an audit or examination, you have a higher likelihood of being able to negotiate the penalty. Unfortunately, a lot of taxpayers will hear about their international information reporting penalty for not reporting foreign accounts, assets, and investments by way of a CP15 notice, assessable penalties. You don't get a chance to dispute it by way of typical deficiency procedures. Instead, you just get a notice. And in fact, recently in a case, Farhi, the tax court said that's, yo, IRS, you can't do that. You can't not give them an opportunity to pursue deficiency procedures and just start penalizing people. That was a 5471 case. How the IRS responds to that is crucial because the same issue would apply to other penalties like 3520, 5472, 3520A. If you're out of compliance, there's various programs you can use to get into compliance. If you're willful, you just can't certify under penalty of perjury that you're non-willful, you would do the voluntary disclosure program. used to be called OVDP. Now it's just VDP. VDP has been around forever, but now it includes both domestic and offshore. There's no separate offshore program. And by the way, don't get thrown off by the term offshore. It doesn't mean you've got a trust in Nevis or the Cook Islands, right? It just means you have money overseas, foreign, overseas, international, offshore. They all mean the same thing, essentially, from the IRS perspective. If you're non-willful, there are a lot of different options available. There are the streamlined procedures, delinquency procedures, and reasonable cause. We got a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.